morning. We will pay attention to source documents today. You sometimes waste a lot of time because you read the document and then you read through all the sentences to see which sentence will go with the document. You can save an enormous amount of time if you read the document first, the sentence, determine what is the document, and just go and look for the document. So it's very important that you must know what is the purpose of each document, that you don't waste time trying to sort out which one of these will be your answer. Okay, so if I look at number A, sales treated as cash sales because the client owes the money to the bank. The bank will pay the money to the business on the same day. So the business will regard this as cash sales because they receive the money the same day and the client owes the money to the bank. And that's when we use a credit note. Credit card payments. So if I look at number 6, credit card payments will then be number A, because that's the sentence that we read there. Withdraw cash to pay wages. So we go to the ATM or we go to the bank and we withdraw money to pay for the wages, and we will pay that with out of the cash, but the bank will give us the information on the bank statement. So it means I must go to bank statement and say number B is one of the answers that we will see on the bank statement. Okay, number C, payment of salaries. We will pay it with the EFT. Okay, number 8, EFT to pay for expenses will then be the payment of salaries. Number D, proof of payment issued to a debtor as proof that the account was paid in cash. So when we receive money from a debtor or from someone that pays their rent or whatever money you receive cash except sales and services rendered, we have to give them a proof that they paid their money. So we will issue a receipt. Okay, so now you just go and look for receipt. That's number 11. And this will be then answer number D. Goods returned by a client. Okay, before we do that, I just want to explain something to you because it will make it easier not to make mistakes when you get an invoice and a credit note. Okay, first of all, I have debtors control. Now, debtors control is an asset, and the asset increases on the debit side. So if we sell goods to them, we want to increase their account on the debit side with the sales. With the goods that we sell, we will issue an invoice. Okay, so the source document will be an invoice that we give to them with the goods. If they return goods, we want to reduce their account on the credit side. And what will we do here? We want to tell them that we will reduce their account on the credit side, so we give them a credit note. So issue credit note. Okay, if we look at those two, we can see that with debtors, when we sell goods, we issue an invoice. When they return goods, we issue a credit note. So the issue word tells you that it's something to do with your debtors. Okay, then in the creditors control, is a liability that increases on the credit side. Okay, so when we purchase goods, we want to show that we owe more money to the creditors on the credit side, and the supplier will now give us an invoice. So we receive an invoice. If we're not satisfied with goods, we want to return it to them. So we want to show that we want to debit the account of the debtors to reduce the debt. So for returns, with the box of things that we send back, we will issue a debit note. And that means the debit note indicates that we want to put it on the debit side of the creditor. Now, when they receive these goods and they are prepared to take it back, out of their point of view, we are a debtor. So they want to decrease our account on the credit side. So what happens? If they are satisfied to take the goods back, we receive a credit note from our creditors to say, okay, in their books, they will credit our account and they will reduce the debt. So what do I see here? We use exactly the same documents, but here in a creditor, I receive the invoice and I receive the credit note. So if we look at both of them, in the debtors, we issue an invoice and a credit note. In creditors, we receive an invoice and we receive a credit note, and that's our source document. So if I look at number E, goods returned by a client. So that means the debtors return it to us, so we must give them a credit note. So I go to number 10, there's credit note issued, and that will be the sentence in number E, and I will show that's the document that I use there. Okay, number F, direct deposit by a debtor to settle his account. Okay, if they do a direct deposit, it will show on our bank statement. So it means B and F, we will use bank statement. Number G, sales treated as cash sales because the card is linked to the bank account of the client. The bank will immediately transfer the money from the bank account of the client to the bank account of the business. And that is when you use a debit card. So if we go to debit card payments, number B, we see that goes with number G here, and that's the answer for a debit card payment. H is sent when the goods is returned to the supplier. So we give them a debit note. So in number 12, we will show H because number 12 equals a note sent. Okay. I, goods purchased on credit. So we receive an invoice. And in number 5, there's a credit invoice received. And goods purchased on credit was number I. Credit sales, we will give to the debtor an invoice. So it is a credit invoice issued, number 4. And credit sales was number J. Services rendered for cash is cash register roll. Okay, so number 3 is cash register roll, and the services rendered is number K. Document received when goods were returned to the supplier. Okay, so when the supplier is prepared to take the goods back, we will receive a credit note, and that will then be number L. Services rendered paid with an EFT. That's EFT payment into the bank account of the business. So that is when is happening a lot in South Africa at the moment. People don't go to the businesses, they order the goods online and they send an EFT to pay for it. As soon as the business receives the money, they deliver the goods to your premises. So that's number I. So you can see that if we do this, where we actually read the sentences first, in your own mind, you make up what is the correct answer for it, and then you just go and look for the correct answer. You can save a lot of money. It is very important to know source documents and for which type of transactions they are used, because you don't know how to do the entries in the subsidiary journals if you don't know what the purpose of the different documents is. So this is really an excellent summary to you of all the different documents that are used, so that if you use this summary that I made here, you have a full summary that you can use to ensure that you use the correct document for the correct entry. I hope this helped, that you understand this work better. Good luck.